And we are looking back at a week in which oil prices went off a cliff on Friday. 5%, $5, whatever the scale of it was, Brent, which was gripping like a barnacle on a rock to $90 for some weeks, finally seemed to relent with the sense that perhaps, and I'll put this to Clyde Russell, Asia Commodities and Energy columnist, Thomson Reuters. Clyde, perhaps finally the outlook for demand destruction on the back of recession outlooks has trumped the supply concerns of the Ukraine war. Is that sort of seesaw tug of war over now? It's all demand destruction?
I think it would be a brave decision to say it's over. I mean, certainly if you look at the other events of this past week, you've had sort of an escalation of at least the rhetoric and, from President Putin and a mobilization of Russian forces. You've got, sort of all sorts of other problems emerging in Iran with the public protests and some very weird rumors out of China, which I don't know if you want to talk about them later, but I wouldn't really say too much about them. I would always wait to actually see something concrete. But overall theme, yes, in the race between recession and demand decline versus tight supply, recession is going to win. And I think that's the key. If you actually look at it, if you go back to the last couple of recessions that we've had, oil demand has not been able to, and oil prices have not been able to hold up. They haven't been able to withstand the recessionary impacts. And I think OPEC Plus and anybody else who's still bullish on prices in the face of a looming global recession, if we're not there already in parts of the world, is probably optimistic. I mean, look what happened in 2020 in the pandemic. Look what happened in 2008. Oil doesn't hold up. It's like I said, OPEC can try to defend $90 now. They end up defending $50 in 6 months' time.
Let's welcome James McCallum, the energy professor from Strathclyde University. Your thoughts on that, James, regarding the sort of demand destruction versus supply concerns piece? Certainly your stakeholder group, if you like, as a representative of industry and those guys who like to dig it out of the ground, sitting on the sidelines enjoying the profits, not joining the party here.
Yeah, I think that's a part of the mix, Sean. I'm minded this morning of a certain set of lyrics. Some things in life are bad. They can really make you mad. There are things that make you swear and curse when you're chewing on life's gristle. Don't grumble, give a whistle. Always look on the bright side of life. As we come into this start of this week, the words of Eric Idle of Monty Python, I think, are ringing in everybody's head. How do I think on the bright side of life? You're absolutely correct. So an enormous turnaround on the markets. Oil price falling, as you say, by somewhere close to 6-7%, and then continuing on that path. All of the major service companies taking the same kind of hits, 8% on Schlumberger, Halliburton 10, Neighbors the same, all the drilling contractors. And so we're seeing an across the board view of the energy sector that demand destruction is now beginning to win through. What I thought was interesting was to take a look at, would there be a significant reversal in share prices of the shale oil, shale gas companies in the United States? There was. The one area which I found fascinating on Friday that kind of held up a bit more robustly, not entirely, but the oil majors like Shell and BP didn't take the same kind of declines as the US producers, or indeed the major service companies. And I'd like to think, following on from the conversations that you were having on Thursday, that there's still a little bit of optimism out there that we have a real story to play in the energy diversification agenda going forward in the energy transition. That's all I can take from that. But yep, it was a bad day for the industry on Friday.
Clyde, just looking at China, not necessarily the story you're pointing towards, which is clearly grumbling still in the fake news weeds on the sidelines, but let's see. But looking at the other part of the China story, you wrote a column last week about the fact that Chinese inventories are still building quite significantly, and now the increased outlook for the likelihood of China to raise its exports to drain down some of those inventories. Tell us what you're seeing at the moment with China and the outlook for the fourth quarter.
Well, I think it's kind of interesting that it hasn't actually been confirmed, but it looks like Beijing is going to release another 15 million tons of export of refined product quotas. Refineries are only allowed to export from China if they have a quota to do so. So this would be unprecedented in some ways because it would be a fifth tranche, but it would only, sort of bring their exports for this year back to something similar that we've had in previous years. Now, if that is the case, that roughly is about 120 million barrels of diesel gasoline. So that actually makes a difference to the tightness of the market for refined products in Asia. What I always kind of stress is that there doesn't really appear to be much shortage of crude. There's been a shortage of refined products. And that's largely because China's been out of the market. So if China comes back in the fourth quarter, and there is actually quite a bit of, they actually give these quotas out and the Chinese refiners sell into them. And at the moment, they'd certainly be very incentivized to sell into the diesel market, maybe not so much the gasoline one, but certainly, diesel prices are still very high across Asia. So that would ease some of the tightness in the refined product market. Does this mean that they're going to buy more crude in order to process those products? Well, not necessarily. I mean, China doesn't actually tell us what its inventory builds are. I do a calculation just by simply taking their imports and domestic production and subtracting off the refinery runs. That's not ideal. It's an indicator, and I've always said that. But basically, there's still, for the first 8 months of the year, there were more than 1 million barrels a day going into storage, or there's not being processed, let's put it that way. So they've built up quite a lot. The last month where they actually drew on inventories, as far according to my calculations, was July. And that's interesting because that July would have been the month where oil would have been very expensive because, they would have been buying it just after the Russian invasion of Ukraine when oil prices spiked to 120, 130 bucks a barrel. So they bought less to arrive in July and they actually drew down on inventories. Since then, oil prices have moderated. They've been getting cheap Russian oil, so they've been buying quite a bit. I'm expecting imports of around 10 million barrels a day in September, which is higher than it's been for the past few months. But, by historic terms, it's still quite low for China. So, just because they're going to export more products doesn't necessarily mean they're going to buy more oil. I think the key to remember with China is they tend to buy oil when they deem it to be cheap or relatively good value. If they think it's expensive, they're not going to buy it. Now, remember, if we're about to move into October, in October, the Saudis hiked their OSP, their official selling price, to the highest on record for October loading cargoes. So that's expensive oil that's arriving in China in October. I don't think there's going to be too much demand. I'm not going to see a big spike in demand in crude. I think they're likely, if they are going to export, they'll run down their inventories to produce fuel, export that, and then they'll start buying crude, especially now that the price is back below 90 bucks a barrel. They're going to start thinking, okay, yes, we'll start buying. But that crude only arrives December at the earliest, more likely next year.
James, the other half of this equation, the sort of demand destruction that Clyde is talking about, really is the supply concerns, the principal bond being in your neck of the woods, i.e. Europe. Big geopolitical headlines last week, of course, the raising of that terrible word nuclear again. Putin has gone into conscription. We have an election in Italy today where a right-wing, maybe more friendly to Putin government could come into office. What's your outlook for the demand or the supply concern narrative? Should we still have it, given what's going on? Where are your thoughts on where Europe is at this Sunday morning?
Well, there's the supply concern issue. I think remains out there for the long term. We've been on a steady pathway to national and Middle East producers dominating the supply story, and that's where it's at now. I touched on the subject of BP and Shell, and perhaps their resistance, if you like, to the incredible downward pressure on conventional producers on Friday being a function of there's a sort of an optimism that they're continuing on a pathway of energy transition. The big producers are simply not investing in, when I say the big producers, the big independent producers or the big super major producers are not investing in long-term production. And that's not a problem that one can fix anytime soon. Even in the United States, rig count, the Baker Hughes rig count goes up and down by a single rig here and there, but it's a third of where it would have been at its peak in those basins, and the US producers continuing on a pathway of paying dividends back to their shareholders and paying down debt. As I said, their share prices took a big hit on Friday. It'll be interesting to watch where that goes over the coming week. But the supply issue remains something which I think favors the big Middle East producers going forward. Saudi, United Arab Emirates continuing to invest in the background significantly in their ability to produce going forward and to take up greater capacity to produce within OPEC Plus. Not doing it just now, as we know, much of the conversation has all been around Saudi looking to exercise some kind of stability in the price by even mentioning that they might reduce production. But that's a short-term thing.
Do you see, James, the big sort of supply horizon concern is one that is already legislated, in that the European Union has committed to embargo Russian oil from December 5th, at least seaborne Russian oil from December 5th. Do you have any sense about whether they're going to relent on that, or they're going to see that through as we kick into winter now and the heating bills and the cold and so forth? Is Europe got the stomach to hold the line on this one?
I think they will see it through, Sean. I guess there's a sort of a slight ancillary question to that, as to whether or not they will continue to turn a blind eye to where the hydrocarbon actually continues to go. Clyde there makes a very good point around, how China buys its oil, and when it comes into the market, when there's an opportunistic point to do so. And we all know that Russian oil has been flowing into China and India over the course of the last few months at a heavily discounted price. The Western world, you could argue, has turned a blind eye to that, because with that supply coming into the market, it has held prices back at around about $90 a barrel. If that supply hadn't been in the market, we would have seen oil prices much, much higher. I think that if you like, turning a blind eye, letting that oil find its way to some kind of market demand to keep the prices down will continue as a strategy of the West. But I think the West, and Europe in particular, will continue to hold the line in terms of its position. I don't think at this stage it can really do much else, Sean, to be honest with you.
Clyde, the other big factor in the demand destruction narrative, of course, is the strength of the dollar. It's not the recession and dollar strength are seem to be coming together. But I wanted to get your thoughts on that dollar strength and its impact in Asian energy demand going forward.
Well, I think we're now looking at what I might describe as a rampant dollar. Certainly, you've got a lot of weakness across Asia and Pacific currencies. The Japanese are looking at defending theirs. Where I live in Australia, our central bank is probably going to raise rates more than it wants to, simply to prevent our little dollar from being crushed. So I think these are quite interesting times in the currency markets. I'm not a currency specialist by any means, but what I can tell you is that if the dollar is strong and oil, the sort of strength in the dollar offsets some of the decline in the oil price. And what you end up with in reality, the consumer faces much the same prices for their petrol and diesel that they fill up their car with, or they drive their delivery van with, and that sort of stuff.
Well, it's like you said earlier, the Chinese like to buy a barrel if they see value. It's hard to see value when the yuan is above 7.
Yeah, and that's something. It's going to. It's like an anchor on oil demand. Let's put it that way. I mean, oil prices have fallen. I haven't seen the pump prices falling in my country. I mean, and if I do monitor retail prices in sort of major economies. They haven't fallen in India. They haven't fallen in China. Well, not by much in China. And it's just sort of those high prices are still hitting economies across Asia, and I think it's kind of interesting because I can't really construct a bullish scenario for crude because I still see plenty of supply in the market. As you say, those Russian barrels are finding their way to mainly China and India.
But Clyde, you do have 5-year averages on inventories. Well, I mean, well below 5-year averages globally. OPEC plus idle capacity is really down to bare bones. SPR in the US is at 30-40-year lows. I mean, these are some of the fundamentals of market stability and that with the absence of, you would think are bullish for the outlook, no?
They're bullish as long as the world avoids the recessionary bullet. If that bullet strikes home, then all those other things don't really matter. They matter once the recession is coming out. And then, the US may decide to refill its SPR. I mean, legally, the US doesn't need an SPR. It's an exporter. So it's just basically a whole bunch of oil sitting there that they can now really use as they're using it. I expect the US will keep selling from the SPR to keep prices low, especially with the midterm elections coming up. So I think, a lot of those other factors are things that we see as normal. This has not been a normal year. In fact, let's be honest, it hasn't really been a normal 2-3 years. We had the pandemic. Now we've got this whole Russia-Ukraine situation. Things, the rule book, the playbook is not quite working the way it should.
Well, certainly you would say not the normal 3 years, not the normal decades in 2008 and 9. And basically the central banks came out and flooded liquidity and the money supply. Nothing's been normal since. But James, normal, also abnormal in the United Kingdom. I can't get away on this podcast. Big story last week. Liz Truss, new prime minister, essentially giving away the crown jewels of your great grandchildren. Your thoughts?
Oh, where do we start? I'll try and keep it as politically neutral as I can, Sean. But the reality is look, you scrabble around trying to find a logic within the strategy of that, and the only one that you can land on is that her advisors, seem to feel that if you allow bankers to return to the elevated salaries that they used to enjoy prior to the financial crash, if you allow the highest wage earners to not pay high rates of tax, they won't leave, or indeed some will be attracted to come to the UK. If you don't allow for the increase in corporation tax, one which I happen to actually support, then businesses will do well. And if you see the fall in the price of the value of the sterling, we'll be flooded with international visitors and people buying UK products, and all of that will drive an immediate and short-term bounce in the growth statistics of the United Kingdom. That's the logic. It's an enormous gamble, an absolutely enormous gamble. Politically, obviously, there is a huge amount of backlash on it within the UK. We will see. It's going to be very interesting this next week to see how the continued fallout plays out. As Liz Truss comes to Prime Minister's questions on Wednesday, it's going to be a rough ride in terms of that mini budget over the course of the next week, and certainly my jury is well out on this. Will actually give the kind of short-term stimulus that they're trying to
what
get.
about, James, in particular, putting aside the sort of financial stimulus part of this, giveaway, but the reopening of opportunities in the North Sea, an area you know well, you've drilled there for decades. Is that too little too late, or is there still something that could come from that?
Yeah, look, the North Sea is dominated now by small independent oil and gas companies. It's not the domain of the super majors nowadays. We touched on earlier on, you know, the investment profile of big oil and gas companies. You know, we haven't invested for a very long time. Investments, even if they were made today, take a long term to flow through in terms of particularly offshore producing fields. So yes, I think it is too little, too late. I was in London yesterday, you know, with a couple of independent oil and gas companies who have been out trying to raise capital, and they were doing that not off the back of a mini budget. Clearly, it was, you know, they were doing that because they're trying to make things happen. And what I got back, without naming any names, was that, you know, picking up on a couple of articles you had earlier on in the week, is going to the banks to look for capital is just a waste of time. Just, it's not there for them. They're talking to the private equity community about backing deals, but even within the conversations that they're having with private equity, if the companies don't have an energy transition, energy diversification story, you know, don't bother coming to the door. I found that fascinating. Now, in the North Sea, of course, that story is one of carbon sequestration. It's a story perhaps for a very few of hydrogen production. And for others, it's about offset into offshore wind. You know, that's the storyline. So yes, it is too little too late from the point of view of big drilling uptake, or indeed massive increases in oil production, or indeed even gas production. It might help with the energy transition story.
Clyde, let's just ponder the thought a little bit as you started out, all things China and these sort of grumbling reports across the junker side of the internet, but nonetheless, there seems to be they're growing wings. Let's look at it from another side. Is that there's certainly nothing I can recall, obviously, in the political structure of China where you would have such an outcome where the leader would be in some ways removed. But clearly, these are uncharted waters. A leader going for the third term in China. Is there anything you would identify from the outside where the structure of the country would warrant or would even indicate that something like this would be remotely possible? I mean, clearly there's stresses in the economy, but it doesn't seem like anything is too turbulent, at least from the outside.
No, I mean, the thing about China is it's, you know, everything and nothing is possible all at the same time is one way of looking at it. You know, the stories about, you know, the potential removal of President Xi is, you are right, those are coming from the very weird parts of the internet. Some of it is apparently related to Falun Gong, which obviously has a beef with the communist government. So I'm discrediting them until something actually concrete happens. But what it does, if you actually look at the fact that this sort of story can pick up and explode and trend on Twitter, tells you that people are uncertain about what's going on in China. I mean, you have next month their sort of set piece political theater where, you know, every 10 years in the past, they've changed leaders. As you said, Xi is now going for an unprecedented third term. And, you know, that's quite something, you know, that does cause a few stresses. Is there unhappiness about, you know, the zero COVID policy and the lockdowns? Yes. But, you know, again, it all seems to be fairly well tied down at the moment. But you never know. But I wouldn't be putting too much, I wouldn't be delving too deep into what you're reading online. I think we can dismiss it until there's some actual clear-cut indicators. And that would, you know, sort of, you'd start to see leadership shuffles and people exiting and things like that. And we're not really having that. We're still sticking to the fairly staged, managed process where some retirements are expected, like the premier, and, you know, Xi's still a shoo-in for his third term. So that's what I'm seeing. I expect it to be, you know, as stable as China goes.
Yeah. Let's go to the survey question. I should have pulled it up a little earlier, but nonetheless, it sort of runs on the theme that we talked about, and that is whether indeed the demand destruction has trumped supply concerns. The tug of war that's been keeping oil, Brent at least, connected to $90 a barrel, has that finally broken free to the downside, with recession, demand destruction tipping the battle away from Ukraine war supply concerns? Or indeed, we only one headline away from Putin making a comment that could send prices way back to the 90 and above again. So welcome the thoughts on that. James, just looking forward the week ahead, as I mentioned, the big story today and tomorrow out of Europe will be the elections in Italy, the potential of a new right-wing government there, giving some support for potential, a potential fracture in the European alliance. Your thoughts looking ahead to this week coming?
Yeah, look, the rise of the right-wing factions across Europe, Sweden, Italy, recently strengthening again in France. Clearly there is something afoot, and none of that would give you confidence that the European or Central European dialogue is anything but unstable. I think I'm watching that with concern. A much stronger word than interest. I think, as I say, clearly, what will happen in terms of the popularity within the United Kingdom of Liz Truss's policies in that regard, and if you like, the favouring of tax concessions to the wealthy, clearly all sending a message around disruption. Look, I'm expecting another rough week. Certainly in Europe, I'm expecting a rough week in the United Kingdom, and maybe my closing remarks would be, again, I opened with Eric Idle's poem. I'll finish with Eric Idle's poem, which says, some of us have got to live as well. Who do you think pays for all this rubbish? They're not going to make their money back. Always look on the bright side of life. I'm struggling a wee bit today to look at the bright side of life. Maybe next week we'll see it different.
We'll go with Monty Python. Let's give Clyde the last word with the survey result and see. Obviously, this room somewhat divided. Not yet pipping yes. Clyde, of course, you're sitting in Singapore. You said at the beginning, which is the start of APEC week. Maybe by this time tomorrow, you'll have a more definitive answer because, of course, all the world's biggest oil traders are within a stone's throw of you there. What do you think the outlook for APEC coming back for the first time in 3 years on the moment that was just announced overnight that Singapore overtook Hong Kong as Asia's biggest financial center?
Yeah, it's interesting. One thing about my old friends who still live in Singapore say that the sort of Hong Kong expat community is surreptitiously relocating to Singapore. It's not something that's been publicized, but a lot of companies, particularly the banks, are just sort of moving all the people away from Hong Kong and into Singapore. APEC, it should be an interesting event. I also think you've really got to distinguish between the paper oil market that we all love and talk about and the actual real oil market where what is largely talked about at APEC, the sort of movement of physical cargoes. On those guys, they're not telling me a terribly happy story. I mean, they're able to sell oil, yes, but there's not an excess of demand for it, and they have plenty of supply. You still see some unsold cargoes from West African loadings, things like that. So there's not really a shortage of crude. And if you sort of look at it, I look at it at a whole range of commodities, not just oil, but copper is still a great one to look at, and copper is not telling you a happy outlook story. The price of energy, electricity in particular, that sort of thing, and natural gas, they're not telling you a happy story. They're just telling you that the costs are getting too high. So, from my perspective, barring an unexpected or an awful event like a nuclear attack or something like that, the trend now is for demand destruction to win the race.
Well, let's see where that goes. If we say a few days in APEC, and maybe you'll discover some very bullish oil traders who want to go long, and or maybe not. They're simply celebrating the profits they took in the first half of the year and aren't even going anywhere near their desks. I suspect there's more of them than the former. Thank you so much, Clyde Russell, in Singapore. Have a great week. We look forward to that circus coming our direction for our forum in Fujairah the week after. So we look forward to getting those stories. James McCallum, thank you so much joining us from Dublin today. Really appreciate your insights. Every morning, 10:30, we'll be here. And tomorrow we'll see if the markets open in Asia later tonight and oil Brent continues this downward trend. We'll have to see, hovering at $85 or so. I lost that $90 handle. Let's see if it gets back there. Thank you very much.
Thank you.
All the best.